Today's show is brought to you by Global X. Since 2008, Global X ETFs have been committed to empowering investors with unexplored, intelligent solutions. Global X specializes in exchange-traded funds that offer exposure to the artificial intelligence ecosystem, including themes like data centers, robotics, semiconductors, and cloud computing. To learn more about Global X's entire suite of ETFs, from covered calls, fixed income, emerging markets, and more, visit globalxetfs.com. Welcome to Animal Spirits with Michael and Ben. Ben, hello, how are you?
Hi.
Hi. So you and I had a conversation with Jared Dillian on his concerns about private equity, private credit, and all the activity going on in there. I thought we were pretty clear that there was not an endorsement and that we were pretty verbal about the fact that we disagreed with a lot of what he was saying. And
podcasts are not endorsements. I personally don't think this is the biggest short ever. That's my disclaimer. Fair?
Fair.
All right. I am a shooter down of narratives. That's my stance in the market usually. Like I think that you're we're
like
far
the
too
Shaq
quick.
GIF thing.
I think we're
with Duncan and Daniel. Make that for Ben.
I think people are far too quick to ascribe narratives because it makes you feel good. It makes you feel like you have your hands on the steering wheel if you go, well, this market is going this way because of this. And this is moving down or up because of this. And I think that just makes people feel better.
Ben is such a narrative swatter that if the markets move decisively one day after the election, he's going to say, who knows? Who knows what's driving them? It could be noise. Who knows?
Yes, I will be saying that. So this is a tweet from Bill, a guy I follow on Twitter who has a SpongeBob SquarePants as his avatar. So must know what he's talking about. Pretty good follow, actually. He shows a picture of the 10-year Treasury yield, and it goes up and down and up and down. And every time it peaks, he kind of says, uh-oh, watch out, it's the bond vigilantes. And I feel like we see this all the time. Remember when rates got to 5% last year and everyone said, all right, here it goes. It's fiscal irresponsibility by the U.S. government. That's what's causing the rates to go up. Then rates come down, and it's like, okay, there was a recession. Then rates go back up. It's like, no, bond vigilantes again. And I just think people spend way too much time trying to shoehorn their own personal narratives on markets that are moving for reasons that probably have more to do with where people are putting their money than anything else.
Yeah, I don't disagree, but just for the sake of argument, sometimes the market is wrong, and sometimes the narratives are wrong. So just because the market might move, and I don't think we're saying anything different, sometimes people are just wrong, and that leads into like the positioning part of it, is that the narratives were wrong, and then the narratives need to get unwound. So
right, there
is something there. You agree?
Yes, like the bear market got unwound because everyone thought there was going to be a recession.
Yeah. Exactly.
Sometimes, yeah.
So all right. So what we're talking about here specifically is the fact that the narrative now is the Fed cut rates and interest rates are rising. What gives? What gives?
Yes. Why is this happening?
So Jim Bianco has a great tweet showing all the previous instances after the Fed first cut rates of the 10-year Treasury yield, and unlike any other time, going out 25, we're now 30 days outside of that. Interest rates are the 10-year significantly higher, and that's never happened before. So again,
it is interesting though that some of those other times rates did rise a little bit. Just not nearly as much as they are now.
Yeah. So Warren Pies tweeted about bonds. He said many are misinterpreting recent price action. The move from 3.6 to 4.25 in the 10-year does not signal a policy mistake. Instead, it is the unwind of recession insurance buyers. And when I saw this, I was like,
boom.
Yes, of course.
Same thing with me. I saw this and I go, oh, duh.
Yeah, so it's a few things. So on TV, we have a lot of people talking about the deficit and the bond vigilantes, so we'll get to that in a second. But Warren's point is it's a combination of, number one, economic strength, a justified higher Treasury yield, but more importantly, and most importantly, and this is why narratives do matter, is because there was a lot of people buying protection in case a recession happened that would send rates lower. We didn't get a recession. We got actually economic, I don't know if strengthening or accelerating, but we got decent economic news. And now that trade is being unwound, pushing rates back to where they probably should have been in the first place.
Right. The idea was you're getting a double whammy. The Fed's lowering rates and the economy and labor market are weakening. So that could be in a recession. That means bond yields are going down.
Exactly.
And that didn't happen. So now people are selling bonds and that pushes rates back up. And that, to your point, it makes sense. That makes way more sense than
it makes way more sense than all of a sudden the deficit matters. All of a sudden, although I'm not like, why do you think gold is rallying?
It's weird. I looked at this and over the last year, the S&P 500 and gold are both up roughly 40%.
Yeah.
And I couldn't find another time in history when that's happened before, ever. It was close in the early 80s, but it's a bizarre thing. And a lot of people said, well, it's because of the fiscal deficits. And I don't know, that almost sounds too cute to me. It's bizarre because most people assume gold does better when real interest rates are lower, but rates have been going higher.
Yeah.
So,
well, maybe this is semantics. Let me ask you this while we're on the topic of narratives. Is it fair to say that gold is going higher because more gold buyers are, in fact, worried about the deficit? And it could also be true that, in actuality, the worries about the deficit will prove to be unfounded. Both things can be true, no?
Fair. That's certainly possible. It's bizarre to see the stock market and gold go up like this. It would have been hard to come up with a narrative ahead of time for that being the case.
Well, what if just risk assets are going up? And I know gold is not traditionally a risk asset, but it is a risk asset. Look at this chart. It shows this is from Bank of America. It shows the biggest inflow to gold funds since July 2020. Now, is that because investors are worried about the deficit? Is it momentum and that's just it? But why does momentum exist? So it's really hard to know. Also, look at Bitcoin. Is Bitcoin a deficit story or is it a momentum, a risk on story? I have no idea, but it doesn't not matter.
This is what you want for your diversified assets, though. You want them all to go up at the same time, right? You don't want them to go down at the same time, but you want them to go up at the same time. That's what you want.
Risk on for the win.
Yeah, risk on. So Colin Roche at Discipline Funds had a post called "We Need to Talk About Bond Vigilantes," and he's saying, like, listen, the government spending as a percent of GDP was really high during the pandemic. Now it has normalized. It's basically, he's not that worried about it anymore. And he had some good points, basically saying, because, you know, Elon Musk has this thing where he says we're going bankrupt, and a lot of people do. And there was a Paul Tudor Jones hit on CNBC where he talked about this. The headline was, Paul Tudor Jones says market reckoning on spending is coming after election. We are going to be broke. And Cullen went through the history of this and showed that there was a piece in 2013 where Stanley Druckenmiller made the same exact claim. And my whole point on the fiscal deficit, government spending thing is sound the alarm all you want, but give me a line in the sand. You can't just scream from the hills every 2 or 3 years, government spending's out of control, we're going broke. Just wait, it's going to happen. That's the thing that makes me mad.
And Paul Tudor Jones has been on this beat for a while now, no? So
yeah, so Take Him shared a post from CNBC in 2018 where he says this. He says, I want to own, this is Paul Tudor Jones in 2018. I want to own commodities, hard assets, and cash. When would I want to buy stocks? When the deficit is 2%, not 5%. Now the deficit is, 7%. So he was saying, he's worried about it back then. So again, this is a guy who is very smart and he's a good investor, but here's my good rule of thumb.
Wait, he's a trader. He's probably...
Yes.
Dude, so I wrote about this in 2015. In 2015, he said on CNBC, we are going to be broke really quickly unless we get serious about dealing with our spending issues. That's 2015. And guess what? He's a trader. I'm sure he's done fine. You know what I mean? Like, it's not like he's not married to his views. If the market proves him wrong, like Druckenmiller, I'm sure he's like, listen, this is what I think, but I trust the market over me, and I'm going to get long or short based on where the market is going, not where I think the market's going to go. But again, it's a mentality.
Here's my rule of thumb that people are probably going to get mad at this because I'm talking about their heroes, but you never, ever, ever listen to hedge fund guys talk about macro. They are terrible at spouting macro. Think about it. Paul Tudor Jones, Stanley Druckenmiller, Ray Dalio. These guys have been wrong on macro in the Fed for 15 years.
Yeah.
And these are some of the smartest, best. And guess what? Their portfolios have done fine.
Yeah.
But if you took their macro takes at face value,
no, their macro takes in public. Their macro takes in public.
Yes, in public.
It's not like you're speaking with them for 10 hours, and right? They're on TV for a couple of minutes.
Yes, but the stuff they say sounds very I got a ton of people asking me about Paul Tudor Jones, and I went back and I found all the times he's been talking about the Fed and the deficit and spending, and my whole thing is like, listen, if you're going to talk about this, then you either put your money where your mouth is, and he said he's shorting bonds, so he is, but guess, like you said, he could change his mind very quickly.
Well, guess what? Short bonds.
Don't listen to these people.
Short bonds has been a good trade. I wouldn't be shocked if he's taking profits here.
It's possible, right? Yeah, that's the thing. The time frames that these guys manage in, the the deficit and the government debt, if it's going to be a problem like everyone keeps saying it is, that's a very long time horizon bet.
I actually saw somebody tweeted about Druckenmiller yesterday. I don't remember who it was. That 25% of his portfolio was short bonds. And guess what? He made money. And he said, I wish it was bigger. George would be mad at me right now, or something like that. Speaking about George Soros, who always said, go for the jugular.
Yeah. So I just don't listen to these people on macro. That's my whole thing.
Agreed.
It's not worth it because they'll change their mind or they'll change their portfolio. All right. Torsten's Lock chart of the week. The S&P 500 doesn't care about rates. So this is corporate business net interest payments are near record lows. And this says as a percentage of, let's see, net interest payments.
Yeah. This is one of the craziest charts from the rising rate period.
So he shows where the Fed started hiking rates. Since then, interest payments have gone down. The net interest payment have gone down near record.
This is not a chart crime, but it's not really showing the full picture, because if you take out the 100 biggest stocks that have these gigantic cash piles, you know what I mean?
Here's the thing though that gets me. Remember, for years during ZERP, people were saying there's zombie companies all around us, and the Fed is propping up zombie companies. And we've heard the stat about 40% of Russell 2000 companies don't have a profit.
Yeah.
Where are all the failures of companies?
Yeah,
now that rates have been 5% for 2 years?
We had higher bankruptcies in 22 and 23, and it's moderating a bit. It probably wasn't the wave that we should have expected, given to your point, the years and years of the zombie company talk.
That's my point, is that these higher rates should have been more onerous on these companies, and if there really were zombie companies, they would have been failing left and right. So maybe, just maybe, they weren't being propped up by the Fed. All right.
I think a lot of these shitty companies were being propped up by the Fed. The scooter company that raised $3 billion, whatever. Like all those free money companies.
No, that wasn't being.
They all went to zero.
That was being propped up by venture capitalists, though.
Because of free money, it all went to zero. All those companies went to zero.
We're never going to agree about this, but venture capital does not borrow money. They don't operate on leverage.
It's not, dude. It's a mindset. It's a mindset of free money. Come on. I'm sorry. Just agree. To use the Charlie Munger. You'll agree with me because you're smart and I'm right. Like, right, come on.
I don't think venture capital is propped up by cash flows, not debt.
Where do you think the cash comes from, dude? The money was free. It was a party. It didn't matter. Cost nothing. Have at it. Let's move on.
All right. Torsten's Lock, another chart shows Nvidia is bigger than the Nvidia market cap is bigger than Canada, UK, France, Germany, and Italy. Almost as big as Japan, which is just insane that in 1989, Japan was 45% of the global stock market. Now, Nvidia is half as big as they are. These are the kind of charts that it's easy to like, whatever. This is insane.
And also not actionable. And I feel like market cap comparisons have cost investors a lot of money, myself included. Like, oh my God, remember when Apple hit $1 trillion? Like,
but
and
don't you think
that was going to be the top?
Yeah, but don't you think this is more of saying how bad things have gotten in Europe as opposed to how good things are in the United States?
It is wild. Don't get me wrong, but like, all right, cool, yeah, we know. Now what?
All right, someone sent me this letter from Giverny Capital Asset Management. I don't know who they are. Apologize, but they had some good stats. So he says the return on equity today. So this is for the S&P 500. Is around 20%, while pre-tax operating margins exceed 16%. I think sometimes investors, or maybe just this investor, forgot how exceptional these figures are. A generation ago, an ROE of 14% and profit margins of 10% were considered good. Then he goes to compare that to European stock markets. German DAX trades for a P of 13 times, earns a 12% ROE and should grow earnings 7%. UK, forward PE of roughly 11.7 times, ROE of 15%, earnings growth of 5. Just saying how it is all these big companies, but they've completely changed the dynamics of the S&P 500.
It's the fundamentals, stupid. You can't talk about the market. You can't talk about the top line without talking about the bottom line.
Yes.
Right?
So our thing last week where we talked about the U.S. being the envy of the world, economically speaking, which was from The Economist. I got some pushback from some Europeans. I got a really nasty comment on LinkedIn, which you don't get a lot of nasty comments there.
LinkedIn? All right. What was the comment?
Well, the one I heard from most people is, but Europe has a bigger safety net, which is fair.
Yeah.
And they list all the other ways the U.S. is screwed up, the guns and the school shootings. Mm-hmm. Fair. We have our set of problems. I agree. And there was a piece in Fortune where they talked about this guy from Norway who runs What does this guy do? He runs Norway's $1.6 trillion oil fund. And he says...
1.6 trillion.
He says America's attitude toward failure is helping propel the nation ahead of its European counterparts. Workers have a better work-life balance in Europe, but they aren't as ambitious as people are in the US. So that's like he's saying, listen, people probably actually live better in Europe, but the ambition in America is why we're pulling so far ahead economically and market speaking. And that's the kind of trade-off where you stop and think and you go, is it worth it? Like, which one's better? Where you take 8 weeks off a year, and you take a nap every day at 3 p.m., and you kind of work 30 hours a week? Or there's not a right answer.
Well, there's no right answer. It's that's a personal preference thing.
And then the other piece of pushback was inequality, which we mentioned. But I want to remind people that researchers, this was also in The Economist, showed that 2/5 of the rise in wage inequality over the past 4 decades has been undone in the past 4 years. So this actually has gotten better. Anyway, that was pushback from Animal Spirits. All right, Goldman Sachs via Sam Rowe again. He's our Goldman Sachs go-to, isn't he?
Is Sam Rowe the king of the via via?
Yes, he's the Michael Scott of podcasting. This is interesting. It shows the 10-year turnover of S&P 500 constituents. The average going back to 1980 is 36%. Over the past 10 years, it's roughly a third of all companies that have changed turnover over a 10-year period.
This supports a higher multiple now. More stability, less turnover. There's less turnover because there's less junky companies that are getting thrown out.
Yeah, but it's still not that far below. My point here is that, like, this is actually why being an index fund is so hard, because the losing companies, you're out of here. We're bringing some new ones in, right? Like, I think this is actually a good diversification selling point. It's not just static, the S&P.
Let me do the flip side.
Okay.
So investors hold on to their losers, right?
Mm-hmm.
So does an index fund until the company gets kicked out. We hold on to our losers until it's a $2 billion company down from 47. I'm making that up, whatever the company is, and then you're gone. Investors also tend to sell their winners too soon. Oh, me as an example. I sold Facebook when I was up 100%. It's probably up 200% since I sold it. I sold Netflix, by the way, last week. Sold Netflix, bought Disney. Credit to me? I don't know. We'll see. But the point that I'm making, Ben, is investors are too quick to sell their best performers. Guilty as charged. An index fund doesn't sell its winners. And that's why it's so hard to beat. That is why it's so hard to beat. An index fund didn't sell Nvidia at 1.7 trillion. For better and for worse.
It's never going to sell those winners too early. That's a good point. This was a good one from the Daily Shot. It shows rolling year-to-date performance in the S&P. So it shows from the start of the year. And so far, going back to 1999, through where we are at I don't know, 300 days into the year, this is the best year of this century, basically. Up to this point.
Wow. And let me ask you another question about this year. Is this the fastest year on record? How is it November already?
Because you're middle-aged and you're a father. This is what happens. Life speeds up as you get older. And you're going to say, oh my gosh, it's Christmas already. It's like, oh my gosh, summer's already here.
You know what? I don't care. I'm always going to be that guy that can't believe how fast time is going. I'm not too cool for it's always, you know what? I'm sorry.
You know what it is though? This is the reason I think, as being a parent, when you first have your kid and the child as a baby, I talked about this with someone recently.
Does time slow down?
Time slows down, and you're constantly, because you don't do anything when your child is a baby, and you sit there and you're like, geez, it's only 10 in the morning. Can we have lunch yet? Because you've been up for so long, and it feels like you're waiting for time to go, and then you like wait for time to put the kid to bed, and then as the kids get older and there's more to do, you're constantly doing stuff. And now we got to go here. Now we got to drop off here. Now we got to go to this game, that game, and you're doing more stuff, and it changes with your perception of time. Yeah,
it's so true. I know I'm preaching to the choir here, but this weekend was wild. We had Kobe's flag football at 8. Then we got breakfast real quick. Logan had soccer at 10. Kobe had a birthday party at 11. Then Logan had football at 1, and Kobe had baseball at 1:30. And then we went to dinner, and I was just like, my head was spinning. And more of the same on Sunday. It's crazy.
It's a lot.
I'm not complaining. I love it, but it just goes to the time thing.
It is. When you get to this stage of life, I often talk to my wife, like, what did we used to do before kids? I have no idea what we did with our time. All that free time.
Well, I read a lot of books. You know, here's one thing about kids today that definitely did not exist when we were growing up, and I'm not sure it's bad or good or whatever. It just is the after school activities.
Oh yeah.
When I back in the 90s, I came home, I watched Spider-Man and X-Men, which was awesome. Ate some cereal, maybe Frosted Flakes, had some Oreos, and then played Xbox for 4 hours. Like, is that better than having an activity after school every day? Probably not.
Definitely not. You want kids out doing stuff, right?
Yeah, I would think so. But right, every day after school?
It's something. Yeah. For us, it's like, it feels like a surprise when we don't have something. Like, oh, there's nothing going on today? Wow, this is bizarre.
Oh, where were we? Okay, Ben, you had a conversation with Sean O'Brien, the director of retirement at Cerulli, for the unlock, which, by the way, we are going to be talking more to our advisor audience.
Yeah, we're ramping things up.
We're ramping things up there. So link in show notes for the advisor unlock, the newsletter on YouTube. I also spoke with Meb Faber about his new 351 ETF. I think the ticker is tax.
Very interesting.
Very, very, very interesting. So that will be dropping sometime next week.
The biggest thing that stood out to me is Sean O'Brien from Cerulli told me last year alone there was $765 billion in rollover assets from 401ks to IRAs. There is just going to be a ton of money in the years ahead that needs financial advice.
Ben, I put this chart from your post in the deck, and I don't remember. Is this going to be one of those things where we spoke about this like 3 weeks ago? Have we spoken about this chart?
Last week we did, yes.
Last week, okay. All right, see?
No, give me. What do you got? What's your take?
I knew it felt familiar. I'm not. No need to rehash it. No need to rehash it. All right, here's my thoughts. So we're looking at two charts, 1989 to 2019 on one side, and then 1989 to 2022 on the other side. And it's showing the median net worth by age adjusted for inflation.
Yep.
And look at us. Look at us millennials. I mean, that's a big takeaway, right? It's the last crazy. 4 years have been very kind to millennials.
To everyone. Millennials, Gen X, everyone. But Gen X and
the
relative,
relative catch up of millennials and Gen X is pretty wild. By the way, silent generation does not mean what you think it means.
No, we missed that one. We flubbed that. Silent generation is the Gen X of then. So the greatest generation, then the silent generation, then the boomers.
Okay.
So silent generation is like the Gen X that no one ever thinks or talks about.
Yeah. What we also got a lot of comments on last week was CY equals calendar year. Duh.
Yes, we didn't know.
Felt a lot obvious.
It is weird to think though that like the greatest generation, like our grandparents' generation, is just not. So you know when you go to parade in the summer and you see the guys walking with their hats that served in the military, like they're they're really
silent generation.
The white hair. No, but here's the thing: you used to think that those are World War II veterans,
no,
and now
Vietnam.
those are like they're Vietnam veterans.
Yeah.
It's kind of hard.
There are no more World War II veterans. I mean, I know there's probably a handful, but they're in their 90s.
Oh, I know. I mean, think about how old Matt Damon was in Saving Private Ryan, and that came out in 1999 or something, right? Remember when he flashes forward and he's old? Or is that Tom Hanks? That was Matt Damon.
Matt Damon.
Okay. All right. Paycheck to paycheck. This is from Axios. They did a look at Bank of America card data, and they said, among households making $150K a year or more, nearly double the median household income, 20% live paycheck to paycheck using their definition of paycheck to paycheck. And then they say, and this is a study, and they say, how can that be? And then this is the answer from their senior economist. One reason is that higher income households may have bought larger, more expensive homes and consequently have bigger mortgages. And often along with bigger homes come bigger insurance costs, property taxes, and utility bills. So it's not like people who make six figures living paycheck to paycheck are like in the poorhouse. They still have this financial asset.
They have more bills.
Yes. They bought bigger houses, and technically they're still saving in that house and building equity. It's just that they probably spent more than they should have because their income rose.
Yeah, I don't know where the line is, and it's person to person, but at some point, like your spending will rise faster than your income.
Yes, for a lot of people, that's the reason. And they make the point too that a lot of the paycheck to paycheck stuff doesn't take into account the fact that people are already saving in 401ks and it's just coming off automatically. I don't think it. Okay. This is a question that I hate. Are you better off than you were 4 years ago? Gallup asks this, and they say the majority of Americans feel worse off than 4 years ago, so they have this economic confidence indicator. and they say 52% of people feel worse off, 39% say better, and 9% say we're the same. And now if you took objective data, housing prices are up 40%, stock market is up 80%, net worth is up 50% over the past 4 years. And if you remember, 4 years ago, guess what we were living through? The pandemic. People were still wearing masks. We had all these weird rules about going inside places. Schools were opening and closing. If you objectively look at, you're better off than you were 4 years ago, and it has nothing to do with the president, right? So this is not a question that people answer honestly. When they answer this question, they're really answering, who am I going to vote for? Right? Like this is another sentiment question that you can just throw out the window. It doesn't mean anything.
Well, yes and no. I think that you're right that objectively, if you were to just look at people's bank accounts, their real estate, their brokerage accounts, their retirement accounts, if they have one, objectively, most of the country is better.
If you put a number on it, I'd say 80% of the population is doing better than they were 4 years ago.
Yeah, I would agree with that. But it does matter in the sense that like there is definitely a mood in the country.
But like, look at this up.
But don't you agree with that? There is definitely a mood in the country.
Yes, but again, I think this is the kind of question I think you can now throw out. It might have made sense in the past, but now you can throw it out the window because of how polarized everything is. Like, look at this next one from the Federal Reserve. Assessment of your own financial well-being. Going back to 2017, it's basically flat, right? It's about 75% of people, 70 to 80%, somewhere in that range, say my financial well-being, I'm doing good. I'm doing fine. But the national assessment keeps going down.
Yeah.
So my point is that like how you ask the question, if you say, are you better off than you were 4 years ago? Everyone instinctively goes, this is a political question. I know it. But if you ask, how are you doing on your own and don't put the politics in it, you say, I'm doing great.
I don't even know if I should sort of like hesitate to even share these thoughts, but whatever. I feel like if you're offended by this, is this like, are we living in like a post-political world? Or maybe I'm projecting that. Like, I was talking to Josh about this yesterday. I feel like sort of people are less on edge and more over it than they were in 2016 and 2020. But perhaps I'm just over it.
That's me too. I'm totally over it. I want this to be over. I think I wish we had like a week-long election cycle. Like I don't need to be 18 months or whatever, however long it is. It's way too long.
So I do kind of feel like a lot of the country would agree with that, but I also don't know if I'm like literally just making that up, if I'm just projecting my thoughts into the rest of the country.
Yeah. Some people obviously love it. Some people are really into this and they go into the battle every day. And I don't know. I do have some thoughts on the election polls and betting markets because I thought that the lesson we took from 2016 and from 2020 and pretty much all of the in-between elections there is that you can't really trust the polls anymore. Like you can't trust, it's not like saying the pollsters are putting their finger on the scale and they're leading us astray, but it's like what percentage of people in your life would answer a phone call from a pollster and answer honestly? 1% of people you know? Like how many people do they have to go through to get the people that they actually get for the polls? I know they're doing the best they can, but I guess I'm surprised.
I got a call the other day and I don't even know why I answered. I thought it was somebody else and I hung up. I mean, I said, sorry, good luck with the election. Now's not a good time.
But
who answers? I don't know.
I'm surprised at the amount of people who live and die by these polls and the election betting markets saying like, look at the polls, look at the betting markets. They take it every day, the movement as fact. And I thought the whole lesson was supposed to be, whoa, let's pump the brakes. And like the way to do it now is like, we don't know. So just be careful. I don't know how anyone can have certainty either way at this point.
Yeah.
With the election. That's my stance.
So everyone has an opinion, whether or not like you really are watching the news and like are really personally invested in the outcome. Everybody's an opinion. I just think like for me, it's been 8 years. You know what I mean? It's just like it's hard to keep up the same level of anxiety because it's just exhausting.
Yes, but I don't know that that's going to go away. Seems like this might be the new world. I don't know. So what Nick Colas had some thoughts on the betting market.
Oh, yeah,
It's funny to me because it was 50-50, then 45-55 and 60-40. And to me, that's a toss-up regardless. But some people, again, take that as like, no, this is gospel. I take the betting markets as gospel. I can't believe anyone in the markets thinks that way.
So now we have liquid betting markets. Robinhood just rolled this out. I guess it's been legalized.
Yeah, Kalshi has it, Polymarket, Robinhood.
So there's a lot of volume on Polymarket, and people are saying like, listen, it's a wrap. Like like actual bettors, like actual dollars, not just opinions, are putting their money where their mouth is, and they're saying it's. I don't even want to throw out a number, but it's skewed to Trump. I don't know what the actual number is. Nick Colas says,
yeah, it's like 60-40.
Okay, so Nick Colas says it doesn't. It's really noise until you get to 70% in a betting market. I guess it's like the analogy that I gave is like it's like the weather. Like if there's a 65% chance of rain, it's probably not going to rain.
I mean, the funny thing, Hillary was at 70%. She lost. So even then,
okay. So anyway, but there's a whale coming in from France that's been reported on in Polymarket that's betting $30-40 million, and Nick Colas made a point that I was like, oh yeah, of course, like. Now we can't prove this, but it sounds reasonable that if you're betting that sort of money, this is like real money. And perhaps, just perhaps, it's to influence other markets. So if there was a perceived outcome, likely outcome for one winner over the other, in this case Trump, it has geopolitical impacts on currencies, sure. Some certain commodities. So they're using this
rates and oil and
they're using this $30 million to push the narrative here, and then investing like $200 million or whatever it is here. So this is sort of I don't really care about this 30 because I'm really going to make money on the peso or the whatever.
I like that take. I'm just surprised at the amount of markets people who've seen this stuff that like the markets are, we've talked about it already. They're not always right. And the fact that people are taking it as gospel, that's the thing that's surprising to me. But I guess people are, again, looking for certainty.
It is interesting. The market seems not, I mean, there's no volatility. And it's like people, you talk about like all this anxiety about the political outcome and all that sort of stuff. Not that the market's the end all be all, but it's just, it is interesting that the market seems to not be bothered.
So would it be more surprising to you or less surprising if we had, like, let's say we have the election night, and whatever, I don't know how long it takes to figure out who the winner is. We have the winner, and there's just not much movement in the markets at all. Would that surprise you more than seeing a big move in one?
No.
Okay, I think that'd be shocking to a lot of market people if we just had kind of a stock market's up 50 basis points or down 50 basis points, but not really a big move in either direction.
No, I wouldn't be surprised with anything. If you tell me that somebody wins and the market's down 2.5%, I mean, I don't know. I wouldn't be surprised. All right. Let's talk about the American dream. So, Visual Capitalist. Somebody sent this to us. The American dream costs $4.4 million. And they broke it down by the lifetime cost. So retirement, owning a new car, a wedding, raising 2 children, owning a home, pets, yearly vacation, and a funeral.
Hey, I can't afford a funeral if I'm going to be paying $4.4 million for this stuff here. Sorry. Dump me out back.
So what do we think?
I think anytime you add these cumulative totals like this, it's going to look weird.
Yeah.
And not, because if you ask someone how much money you're going to make over your whole career, like, I don't think people would understand I saw a doctor post this on Twitter a couple months ago saying, I'm like 40 years old, and by the time I retire, my lifetime earnings will be like $10 million. And I thought, like, $10 million, that's crazy. And I looked up, I think the number is probably for a doctor like $250 a year or something to get that. The numbers, I'm not, it's directionally right, it's not accurate. But the cumulative total probably makes things seem worse than it actually is for most people. Is that fair?
When you say worse, oh, you mean the cost? That sounds like a lot of money.
It makes the cost look way higher than. Here's the question: how many people actually get to these levels?
Of what, spending?
Yeah.
$800,000 for car. By the way, speaking of cars, dude, Audi still has my car. And I haven't heard anything from them. Like, I think Robin's put 5,000 miles on the loaner.
Drive it to the ground, man.
I don't care. Good. As long, I'm not putting but it's just, what sort of customer service is this? They've had my car since August. I heard from them once.
That is crazy. Parts supply problem?
I have no idea. I don't care. Keep it.
Okay, back of the envelope for American Dream. So if you make an average of $150K for 30 years, that's the average. That's like $4.5 million. So that's the number. So does that square a little better?
Yeah.
In that?
When you put it that way. You put it that way. All right, Ben. Where are we going next?
All right. The Wall Street Journal had a piece on how inflation has cooled, but Americans are still seething over prices. Seething. That's not just mad. They're seething. And they interview this woman, and she says, It's hard to adjust. A 54-year-old engineer from Doylestown, Pennsylvania. You lived with these stable prices all your life. Mentally, it's hard. And she's saying, like, we've had to make some changes. And the thing is, like, prices haven't been stable your whole life. There has been inflation. And I looked at this. I had Chart Kid Mac.
You're never going to win this, Ben.
No, I'm making a point here. Just go with me. Okay? So inflation in the 2010s, which included a period of deflation, obviously, in coming out of the crisis, was 19%, roughly 20% in total for the whole decade, right? So we had, I think it was like 1.7% inflation, very low, but we still had 20% rise in overall cumulative prices. We've now roughly had that same cumulative rise in the first 5 years of this century, right? It's been 22% cumulative inflation. So my whole thing is that we could have 0% for the rest of the decade, and people for a long time would still, obviously, the cumulative for this decade is probably going to be, 30% now? It's going to be higher, maybe even more, 35% after all is said and done, depending on what it comes in at. But the fact that we pulled forward and compressed it, that's the thing people can't handle. They need the slow but sure rise, and it's kind of like early success. If you look at all the stats of the people who go bankrupt from winning the lottery, it's way higher than people who just have a regular stable income. So the people who slowly but surely build their wealth in their 401k and their IRA from age 25 to 65, they're far less likely to go broke than the person who wins the lottery at age 25 and pulls it all forward. That same thing applies to inflation. It's the earliness or the pull forward or the volatility. That's the thing that affects you psychologically. Does that make sense?
Yeah.
So like that's the problem. Like it could be the same cumulative price rise, but if you compress the time horizon, it totally screws with your perception of everything.
Yeah. Well, have you mentally adjusted to the price of everything? I'm still like $24 for a salad with chicken. Like I don't know at what point will that not boggle my mind. It might take me 4 years to digest that.
I don't know. I guess the new normal thing is just kind of, I don't know if there's anything that I've looked at that I'm like, oh my gosh, it's probably housing prices for me. Like when I first bought my house, for what they just sold the house that we bought our first house. We lived there for 10 years. We bought it in 2008 crisis. So we bought it at a fire sale price. And we sold it for a hefty gain. And the people that just sold it again after we sold it to, because we get the Zillow alerts, it's like they sold it for how much? It's that the housing prices thing to me is probably the most shocking.
Yeah, that's gonna take a longer time. All right, last comment on politics. I just to get ahead of the comments or whatever.
Oh, you're going back. All right.
The last thing. I understand that like us not having to really worry about who's in the White House is a position of privilege. I understand that. So for everybody that's going to email us and say, well, it's easy for you to say, I get it. I understand. Okay. We are privileged. I get it. Okay.
There's nothing you can say about politics right now that won't get someone angry.
I know.
That's the problem.
I know. Should we just delete that whole thing? I know.
No, it's probably best. But no, I don't think we said anything that's too out.
I know, but we're getting emails, whatever.
Okay. From Bloomberg. Back to normal. Food inflation. Americans are now spending the same percentage of expenditures on food as they did before the pandemic. So food makes up 7.4% of consumer spending, the lowest since before the pandemic in February of 2020. And I don't know who wrote this one for Bloomberg, but they're saying like, what if it was transitory? They look at the average, the CPI is back to average. I know. But the question is, what happens to make it come back? I think that's the thing that people are.
When you say it come back, are we talking about price levels?
No, not that's never going back. Okay, higher prices. What's the thing that makes inflation get back to 5%?
Oh,
what would it take?
I have no idea. You see what happened to oil yesterday, down 6% on the day?
Oil's in a lost 2 decades. Are we almost for oil?
There's too much supply.
Crazy.
It's funny that there was like concerns about like the end of oil, like that we would run out or something.
Yes. Oil, it's under $70 and
obviously,
again.
I don't know shit about energy, but like obviously alternative energy, clean energy, just there's a lot of supply, which is a good thing.
So oil is now at $67 a barrel. That first happened in the spring of 2007.
All right, so on a real basis.
So even on a nominal basis, oil has gone nowhere for almost 2 decades. That's insane.
Yeah. This is not great. Speaking about things going up. Bill McBride tweeted the 30-year mortgage is now 7%. That sucks.
It's unbelievable because the conventional wisdom was always, okay, rates go up much higher. You have the same level of activity. Prices have to fall. Instead, the housing market has gone, no. Rates go up. activity falls, prices go up a little bit. And that's what's going to happen again.
I think I was listening to Joe and Tracy. They had somebody on talking about the spread between mortgage rates and the 10-year and like, why is it so high? It's like investors demand a premium because the term is like there's negative convexity in the mortgage bond market.
Yeah, that was a very good episode.
Yeah, because if rates go down, people prepay and that's it. Like you get your money back and now you have to invest in lower interest rates. And we think that rates are probably going to go down and people are probably going to refinance. And so mortgage bond buyers are demanding a premium, as well they should.
Yeah, that was a very good episode. Tom Graff, I think is the guy's name. All right, the Wall Street Journal is coming around to the Ben Carlson way of thinking. America is primed for a home renovation resurgence, and they show the amount of spending has gone up considerably. They talk about the amount of $35 trillion in home equity. They did this poll where they say they recently polled almost 500 households, and they broke down into two groups of people with renovations. 30-somethings planning work in the $60,000 range, and then older homeowners eyeing updates that will cost $30,000. And they say the former are motivated by marriages, babies, and career changes. They are less sensitive to interest rates and prone to remodel sooner. And I think you and I fall into this category. And here's what I'm going to make the pitch for people ask us a lot about home equity line of credit questions and stuff and renovating. If you locked into 3% mortgage, your capacity to borrow is way, way higher than you think. Because if you had to buy a new home right now, you were forced to, and you had to take on that 7% mortgage and a higher home price, you'd be borrowing more money. So that's why I'm okay taking out a home equity line of credit and borrowing a little bit, because if I was in the market for a new house, I'd be borrowing more anyway. Now, the opposite, the frugal person would say, no, you just save it. Save the difference. That's the thing, and that makes sense to me too. But
their own. There should be, not that I would read it, but there should be like a new homeowner manual, a handbook, if you will, for some of the things that you need to know. Like, for example, your boiler has filters that need to be changed. And if it's leaking, don't just put a bucket underneath it for 4 years. Actually, look into it. And I say this because
4 years?
3, I don't know. When did I move in here? Yeah, 5 years.
How often do you have to change the bucket?
We change the bucket. It's cold in my house. There's a big difference between 60 degrees inside and 60 degrees outside, I learned. Yesterday, I took a warm shower because my hands were starting to freeze. My fingers were starting to freeze as I was typing.
You have no heat in your house right now because of this?
I have no heat in my house. So I called my HVAC guy. Shout out to Raphael.
Why don't you just sell your sell your Peloton if you need to money for the boiler.
So he's showing me the boiler and the filter, and he's like, Michael, dude, you got to stay on top of this stuff. And I was like, nobody ever told me.
So we were going to get a new dishwasher. Our dishwasher finally kicked the bucket because we use it all the time, at least once a day. And I'm going to show you a picture of it because it's got a nice new rack for putting things in nice and orderly. And they're like, if you buy this lower end model, you have to change the filter once a year. And if you buy this higher end model, you don't have to change the filter. And I'm looking at the lower end model, which we currently have, and I go to my wife, I'm like, I've never changed a filter in a dishwasher. What? I didn't know that dishwashers had a filter.
Yeah.
Did you?
No.
Obviously you don't, the way that you load your dishwasher.
Of course not. Actually, Raphael came to my house I was laughing with him last night when my hot water went out last night. It'll be fixed today. But credit to me, what a husband I am.
You have Raphael and Tito. You basically have the Teenage Mutant Ninja Turtles running your house over there.
So I filled the bathtub for the boys, and I didn't realize that the hot water had conked out. So Rob said, all right, they could skip one night. It's fine. She goes, but I need to take a bath. So I filled the bathtub, and I boiled like 8 pots of water. Did nothing. Did absolutely nothing. The water was still freezing. So
You're living in medieval times.
Yeah, how did people do it back then? But anyway, so I was joking that I called Raphael probably 4 years ago when my air conditioning conked out. And all that I needed to do was replace the filters. You know, like you have like vents up top in the ceiling, and there's just that little tiny filter that you get from Home Depot for $4. Do you know about that?
Yes.
Yeah, of course you do, because you're a homeowner. I didn't know about that.
No, I let my father-in-law tells me when to do these things. I don't know them. Here's my one pitch on renovation project. To your point, to each their own. Here's what I will say. If you really want to do a home renovation project, you want to redo that kitchen or bath, like, I don't think you wait. I don't think you wait and say, I'm going to wait for. I don't think prices are going any lower. If that's your thinking, I think if you have the means, you do it. I don't think you wait, because I think if you wait a year, price is going to be higher. If we wait another year, the price is going to be even higher. I don't think the demand for this stuff is going down.
Insert the Jennifer Love Hewitt meme. What are you waiting for?
There you go.
By the way, I think they're bringing it back. I don't know if they're making a show. We spoke about this, a show or another movie, a reboot of what I Know What You Did last summer. Terrible movie that scared me in the 90s. Not a good movie.
Great cast, though, right?
Sarah Michelle Gellar.
See, that's my kind of horror movie.
Oh, Ryan Felipe. You definitely loved that guy in the 90s.
Yeah,
oh, Freddie Prinze. You were definitely a big Freddie Prinze guy.
Freddie Prinze Jr.?
Were you not? Come clean.
I mean, She's All That is... Listen, she had glasses on and her hair in a ponytail, and they just took the glasses off, put the pony down, and she's beautiful.
I was not another teen movie guy. That was hilarious.
That introduced us to Chris Evans. That was a funny one.
Yeah.
Okay.
Oh, actually, speaking of movies and scary stuff, somebody emailed us. It is Halloween after all. By the way, we have a Halloween party on Saturday night, which I'm not a Halloween party guy. That might shock you.
So what are you going to wear for your costume?
So I not involved in this. So Robin picked out I'm going to be like Coach Dable and she's going to be a ref. So that's the coach of the Giants. So she got me like a headpiece and I don't even know what she got me, but I woke up this morning like, wait, I don't want to do that. I fucking hate the Giants. I can't take it anymore. But you
should wear your headset you're wearing right now.
I should be a podcaster.
No, I'm saying wear the headset because the coach wears a headset.
No, she got me a headset.
Oh, okay.
But I don't want to be him because I hate us. But anyway. Oh, I'm sorry. So I distracted myself twice. So somebody emailed us asking about horror movies, like slasher movies from the 80s. Jason Voorhees, Michael Myers, Freddy, etc. And he was wondering if those movies are like so dated that if somebody was to wear a hockey mask on Halloween, would kids today just think that they were being a goalie? That's a good question. I think
we went to there's this house 10 minutes from our house that these people do a crazy Halloween, like it's their house is on a trail and they do these crazy Halloween decorations. People walk by it and look at them and like you walk by stuff and it moves and jumps out at you or whatever. And there was a Michael Myers mask and it freaked the kids out even though they'd never heard or seen of that movie. So I think it still plays.
Oh, interesting. I'm not a big fan of like haunted jump out people, even though I like horror movies. I took Kobe to one a couple of years ago and he wasn't scared because he had no idea, but it was like dark and there was like, I did not enjoy it. That was too scary for me.
You can't handle, even being a horror movie guy?
Like spook walks, whatever they're called.
Okay. It doesn't do it for me. Okay. Oh, this is a good question. Question from a listener. We're expecting our second child this month and are coming up on school decisions for our oldest. We're thinking through the public versus private K through 12. Spreadsheet warrior perspective, the opportunity cost of private school is gargantuan, well into the 7 figures over time. However, there are upsides to it that we value. We have access to highly rated public schools in my area, so this is an option as well. Since you have young ones, I'm sure you've thought through this at length. Curious your opinion. Disclaimer, this is obviously like, this is up to you. My thinking is, if you have a highly rated public school, I don't see the reason. I think private school, unless you have a kid that needs a certain specific area or something, do you think the private versus public is really going to matter for your kid if you have a good public school? That's how I think about it. And I went to a private school when I grew up.
Oh, you did?
Well, Catholic school. Does that count?
Yeah.
Okay. I would have been just fine going to a public school.
Yeah,
that's my line of thinking.
I don't want to opine. I know nothing about private school.
I'm sure there's people who have very strong opinions on this. But
it depends on where you live. There's great public schools where I live, so it wouldn't even occur to me to send.
Your kids are going to public schools?
Yeah.
My kids getting out of daycare and going to public schools was like the biggest raise I've gotten in the past 10 years. That's just my line of thinking, especially if this person is a spreadsheet warrior.
Oh, so let's be honest. I'm a man of the people. I'm a public school guy, okay? That's who I am.
Or you could split your children up and send one to private, one to public, and see which one ends up better.
But it depends. Like, if the option is sending them to like a crappy public school, like why would you do that if you could afford to not do that? So I don't know. It depends.
But yeah, they have highly. Okay, this is a good feedback on Waymo. I was one of the earliest people to take an unsupervised ride in a Waymo here in Phoenix. They're fun and yes, like magic for about 5 minutes. Then it gets oddly boring. They're one of my favorite things to do with visitors. However, given a chance, I will take Uber 10 times out of 10. Why? Because they're painfully slow and kind of annoying. They won't go a millisecond over the speed limit. They won't pass public buses. They take dumb routes. They often won't drop you at your exact location and will make you walk, etc. I've seen some videos where there's bumper to bumper traffic and the Waymo won't just nose out and get in line, so no one lets them in. So I can see the painfully slow part would really get to me, because I've been in Ubers in New York before where they're weaving through 5 lanes of traffic and they're getting you there fast. Like,
Waymo sounds like socialism.
I can see how that would be annoying. That actually
awful.
makes sense to me.
It sounds awful.
All right, I got some stories.
Okay.
Kids puking in the middle of the night. We've been pretty darn lucky on kids puking in the middle of the night. But the other night, my daughter, my oldest, came in the room and said, "Hey, I threw up." And I walk in a room and there's a big pile of
It's the
just
worst.
sitting there.
Smell does not go away.
Oh no, not at all. And she for 36 hours couldn't keep anything down. Couldn't keep water down. Couldn't keep food down. She threw up everything. And when that happens to your kid, it basically just puts a speed bump in your life. Like, your whole life has to stop when your kid is sick like that. Like, my wife had to take her to the hospital for IV fluids. We've always been lucky with that, but it's tough. She's better now. All good. Kid puking in the middle of the night though, like, I was like, oh man, we've been so lucky. And then she threw up so many times. Awful.
Awful.
I've got a teen fashion take.
Okay.
Okay. As this is coming from a guy who was Mr. GQ in his high school, remember? Right? Voted
Wait,
on
what
by
does
my
it mean?
peers.
Literally, Mr. GQ? Like that was a superlative that you won?
Like in your senior year yearbook, you vote on, like, this person is most likely to be a CEO someday. This person, I got Mr. GQ, meaning I was best dressed in high school. So we've been going to some of the high school football games for my kids. Now they have friends, they're getting older, they want to go to the games and whatever, run around. They don't even watch the games, they just run around with their friends. I've got to take on teen fashion. It's time to step it up, teens, because I think the teens look like they work from home. They're wearing all pajama pants and joggers, and they're not, where's the jeans with a flannel shirt and the vest? That's what I wore in high school to the football games. I mean, come on, that still plays today,
Wow.
Like, I didn't see one pair of denim on a kid in high school. They're all wearing joggers or even like pajama pants. Like, step it up, kids. Like, have some respect in yourself. That's my teen fashion take.
I was a slob of a looking kid in high school. I definitely
think
stoned all the time. Just backwards hat, dirty backwards hat. I don't know. Not a teen fashion guy. Again, it might surprise you.
Okay, I'm just saying, like, I think the pandemic probably changed things in them, but like, I'm shocked at the amount of kids that are just way too laid back. Like, have some respect in yourself, teens.
How about the mullet?
There are a lot more mullets these days.
The mullet is prominent.
I don't mind it. I'm not gonna lie.
I forgot last week. No, I didn't forget. It was this week. I'm sorry. On the plane ride home, I was sitting next to a dude that was using a handkerchief, which is just so gross. Who uses a handkerchief? This dude was wiping his nose for 4 hours.
Yeah, it's gross. I mean, throw it away.
I was it's walking season up in the Northeast. Great walking weather. And I was walking around my town, which I do frequently, on phone calls, business phone calls, I might add, not just walking.
That's your thing. And every time you're on calls with me, I see this.
I'm always walking. I saw a delivery for like the big water jugs. I think the brand is Crystal Springs, like the big ones that go, like, I guess, upside down into somebody's water tower. How is that still a thing?
Those are good though.
You have those?
No.
What do you mean? What do you mean those?
You mean like the water cooler?
For the water cooler for the house, you have that?
Oh, no, not for the house. But those things, when I was in college, we lived in Philadelphia for a semester, and we had that. We had one of those in our house, in our apartment, and that was the greatest thing ever on the weekends. Just the cold water waiting for you after a night out.
We had that in college too. But for homes, what's wrong with the Brita?
Oh, okay. I don't know. Yeah, that's a good point. Most refrigerators come with a water filter too.
But listen, I listen to the market, so obviously there's demand for there. So maybe I'm wrong. All right, I've noticed 2 bubbles, Ben. Bubble number one. Gigantic
water bottles.
Not this one specifically. I don't know what this is. This is called Zulu. Gigantic water bottles. I walked into Target and there's a whole section of oversized water bottles. A whole section. This will not be a thing in 5 years.
The thing is, it starts young. Did you ever water bottle when you were a kid?
No. Oh yeah,
But
yeah. I know kids have water bottles these days.
my
Yeah.
kids have water bottles at all times. Like my kids have the big Stanley cups. They have a water bottle. They have a sports water bottle. They
That's
have a
good.
house
Water's
water
healthy.
bottle, a school
Water's
water
healthy.
bottle.
But we don't
It is.
need 47 different variations of water bottles. Here's another thing that we don't need 47 varieties of that I think is in a bubble. Greek yogurt. You know how much I love to grocery shop.
Ooh, I'm a big Greek yogurt guy.
Who doesn't love Greek yogurt? Do we need 40 brands?
I agree. There's too many of them.
A lot of
You know what
shelf
you can do, though?
space.
Get the zero sugar ones. They taste just as good.
I don't do that.
You don't need all the fat and sugar.
I need it.
Okay. All right.
I need it.
Recommendations. Can I go first?
Please.
All right. You said you went to see the movie Trap in the theaters recently, a month or two ago. And when you explained the plot to me, you said, hey, it's a serial killer who is brought to a concert with his daughter and they're trying to trap him in. And I thought, wow, that actually, and you said the ending's kind of ridiculous, but the premise.
No. Not kind of ludicrous. I will insert one more thing. I went with a friend. And so we had a great time literally chuckling at the absurdity of it. Had I watched it by myself on my couch, I probably would have maybe thought differently.
This is one of the worst movies I've seen in a long time. Oh my Lord, was it bad.
But did you have fun?
Not just bad, but bad because it took itself seriously. That's the problem. Like, there's some movies that you don't think it took itself too serious?
No, not at all.
I thought Josh Hartnett was very cringe, and I'm a pretty big Josh Hartnett fan. Here's the other thing. There are no serial killers anymore. I don't think serial killers can exist anymore. And also, he's a parent who's a serial killer. There's no way you could have time to be a serial killer as a parent. With all
do not nitpick
stuff
M.
that
Night.
we do.
Don't nitpick M. Night. Like, stop.
It was. I liked the Cabin in the Woods one. This movie was really, really bad, like in a cringy way.
Yeah, no shit. But okay, so you didn't even have fun? Like I had fun watching it.
I had to finish it just because it was off the plot itself, like how he kept escaping. It didn't make any sense.
Exactly.
Okay. Speaking of serial killers, there's a movie on Netflix called Woman of the Hour, by Anna Kendrick. I think she directed it too. It was a true story in the 70s of a guy, which is obviously got to be the height of serial killers, the 70s. I feel like all of them took place in the 70s.
Yeah.
That was like serial killer decade. And it was this woman who went on the dating game show. You know where you have one woman sit and then there's three guys on the other side and you can't see them and they answer questions? It was that show, and there was a guy who was literally a serial killer who went on that show and she picked him as a date. It's one of those stories where the true story of nature of it is better than the movie itself, but it was only like 90 minutes, so not bad, but it's one of those ones where I've never even heard of this serial killer before. They think this guy killed anywhere between 10 and 130 people.
Wow.
In the 70s.
Speaking of dating shows, how great was Singled Out? Remember Jenny McCarthy and then Carmen Electra?
Oh, yeah. I would watch that when I got home from school, for sure.
Who hosted? What was the dude's name? Chris something?
Chris Hardwick.
Yeah, great hair.
Not bad. I started watching The Penguin. I'm 2 episodes in, so I'm guessing I'm going all Michael Batnick takes here. Here's my one nitpick with it. Good show.
No. It doesn't even. Just wait till episode 4 before you. But fine.
No. But the only nitpick is not with the plot, but it's with just. I love Colin Farrell, but him in the fat suit in the makeup, like. It's hard for me to take it seriously knowing that he's in all the makeup and stuff.
Okay, I understand. Come back to us after episode 4. Okay.
All right, I'm 2 episodes in.
Okay.
I like it, but that's my only nitpick.
Okay.
What do you got?
All right, I saw Adam Neiman, a film critic who I very much enjoy, tweet something about a movie, like a horror movie, that he like will judge people's taste based on this movie. And I'm like, this doesn't even look familiar to me. So I Googled it. The movie is Kill List, by the way. Kill List. So I Google it, and it shows, Ben, look at the doc. It shows already watched. Check. And I'm thinking to myself, whoa, that's a cool feature. How does it know that I watch this? And wait a minute. I don't remember watching this. I've never seen this movie. So I fired it up on, I think it's on Prime. And it turns out I did watch this movie. And it is a very good movie.
So who knew that you watched it?
Google did. Look at this. I put it on the doc. It says already watched. Check.
Interesting.
And I had no memory of this movie until when I got it. I was like, oh, yeah. Very good movie. I did forget I watched this.
I feel like you could get in trouble with some other types of adult entertainment in that.
I was talking to, speaking of horror, Terrifier 3 crosses $50 million at the worldwide box office and officially becomes the highest grossing unrated film, even surpassing the highest grossing NC-17 films. Damien Leone, the creator, tweeted that. I don't love the Terrifier movies. It's just not necessarily for me, but it is incredible that there's people love this shit. Horror is like really killing it at the box office.
I guess the indie horror is the one thing that can really break through. Those are like microcaps that go to like, right?
Because they cost nothing to make. So one of those movies is a movie called Strange Darling, which I believe I've pounded the table on here before. I love this movie. And so here's what I do, Ben. I don't know about you. I don't watch trailers for these movies. So like, yeah, Gladiator 2, like, yeah, I'll see the trailer, I guess, if it's on, but I don't go seeking out trailers.
Oh, because they give away too much in the trailers these days, right?
So I raw dog it. So like I was talking to Arts and a couple of the guys that we work with about another movie called Mads that I saw Sean Fennessy tweet about. So I'm in. If I see Sean Fennessy tweet about a horror movie, I'm watching it. I had no idea what it was about. And Arts is like, oh, I could have already probably guessed the twist. I'm like, why are you watching the trailers? Just go watch the movie. Just go watch the movie. No expectations. So anyway, Strange Darling is one of these such movies. Like, again, I could probably guess the twist. Like, just go watch the movie. Strange Darling, Table Pounder. Great movie.
I'm sorry. You're the opposite to me of Sean Fennessy. These movies just don't do it for me. So no offense to you, but I just won't watch
no
these.
offense taken.
We watched Mrs. Doubtfire with our kids the other day.
So good.
I don't think there's anyone, past or present, who could have played that part that Robin Williams played.
I think right.
he's the only person who could have played that.
Did I call him the greatest comedic actor of all time?
The thing is, I don't think there's no comedic actors who could also pull off what he did in Good Will Hunting as well.
No.
He really was a one of one.
So I saw that movie. That hit home because I saw that movie. I think I saw that movie like a year after my parents got divorced, and I was like 6 years old. So that movie really.
I feel like the '90s had a lot of divorce movies. You don't see those as much anymore.
It's true. I love that movie.
It really did. And my kids were into it too.
How great was Pierce Brosnan? The whole cast, even the kids were great. What a movie.
Yeah.
All right, Ben. Happy election week. I know that's next week. Happy Halloween.
Do we need to tease our election special we're doing?
Oh, yeah. So, what are your thoughts next Tuesday? It's election night. So, on Wednesday, myself, Ben, Josh, and Callie, we are going to talk about the market's reaction to the election, and maybe there will be a big reaction, and maybe there won't be.
We'll record Animal Spirits as usual on Tuesday. So the Wednesday show will be, I'll share my thoughts about if this person wins, this will happen. If this person wins, that'll happen. So I'll have those two forks made up, those two paths. But then we're going live on Wednesday. Tune in at the Compound. Email us, animalspirits@thecompoundnews.com. See you next time.